Hello everyone. Let's start our today's discussion. I hope you all remember that in previous class we started our discussion on audit planning chapter and we covered our first topic within it, and that was business risk. From our today's class, we will be starting a series of past paper discussion on business risk topic so that you can have more clarity that how you have to deal with the exam question. But before moving in detail of this past paper, let's take a quick review of what we have discussed in our previous class. We started our previous class with an initial discussion of audit planning, that it is a mandatory phase of audit activity and it is necessary for auditor always that whenever he is doing an audit activity, he has to plan it first. Within audit planning, auditor performs multiple tasks, which include understanding of the client's business and its environment, performing risk assessment, planning materiality level, planning the deadline of the engagement, understanding the internal controls and systems of the entity, understanding the applicable reporting framework, understanding about applicable laws and regulation, composition of audit team, planning principal audit procedures, and many other steps. These all steps are done by the auditor in order to plan his engagement appropriately. Because until and unless audit planning is done in quality, it is not possible to perform the audit engagement with sufficient quality. So audit planning is a mandatory phase and very important phase of any audit activity. Then we discussed that audit planning is not just done in mind. It requires preparation of two documents. One is audit strategy, which is planning at entity level, the overall planning. And other document is audit program or audit plan, in which planning is done at each head level. Then we had discussion on risk assessment. It is one of the essential topic within audit planning because it is examined for 20 to 25 marks at least. See, practically also, it is very important for the auditor to perform risk assessment before going for detailed audit activity. The reason being that auditor is giving reasonable assurance, and reasonable assurance means he's saying that financial statement presents true and fair view as a whole. Now, for as a whole, he will perform audit of high risk areas so that he can form an opinion on the financials as a whole. See, he's not giving absolute assurance. If the assurance would be absolute, there would be no need of risk assessment because in that case, he would be checking everything. But since the assurance is reasonable, which is not absolute, but it is almost complete assurance, so he has to make sure that he performs risk assessment and his audit activity focuses on high risk areas greater. Now, in risk assessment, three risks are assessed: business risk, risk of material misstatement, and audit risk. In the previous class, we had detailed discussion on the topic of business risk, that what the business risk is, what are its examples. Then we had exam focused discussion, and then we also covered an examiner article relating to it. Now, from our today's class, we'll be doing series of past papers on topic of business risk. Then, once we are done with these past paper questions, I will give you three questions as a homework on which I'll be giving you a personalized feedback. So this is my approach for any topic. We study concept, we have discussion on exam focus, we cover examiner articles wherever they are available. Then we do classwork questions in which we are discussing complete past papers during our class. And then I give few questions as a homework which students have to attempt and send me for marking and feedback. Now, in business risk, we had a discussion that these are any factors which affect an entity's ability to achieve its objectives. Now, objectives, we are referring going concern, profitability, and going concern issues. Okay, that any factor which can affect the profitability of the entity, or it can affect the cash flows of the entity, or it can affect the going concern status of the entity. In the examination, you will be provided with a scenario of a client and you will have to evaluate business risk from it. Okay, practically, when an auditor is evaluating business risk, it is very important that he has sufficient understanding of the client's business and its environment. Business risks are important because these business risks then lead to impact on the financial statement. And these impacts can include impairment of assets, legal case provisioning if there is some business risk relating to a legal case, or maybe it may be related to going concern issues. Then we discuss some example business risk like technological change, change in laws and regulation, change in fashion or trend, new competitor, price war. These all factors can affect your business. Or similarly, if there is a natural disaster or there's an economic recession or we are too much dependent on one supplier or one customer, these all are the risks which are faced by a business. Risk is something which is uncertain, which can affect your business adversely. So I hope you all remember that we had detailed discussion on the concepts, okay, on the concepts relating to business risk. If anyone has not watched the previous lecture in detail, the class is pre-recorded. You can simply go back and watch that lecture again. Then we had exam focused discussion that business risk can come between 8 to 15 marks. It is a topic within risk assessment. So total marks for risk assessment are 20 to 25. Within it, business risk can represent 8 to 15 marks. Rest marks will then be allocated to risk of material misstatement or audit risk. In the examination, you'll be provided with complete detail about the client's business and its environment. You just have to focus on that information and evaluate business risk. No background knowledge or background study of any industry will be required. Then we discussed that in exam, you have to evaluate significant business risk. Significant business risk are those for which sufficient detail is given in the scenario. You have to read the scenario carefully and only refer those risks for which the examiner has given you sufficient detail, because those risks will be considered as significant in the client's situation. Okay, so you shouldn't be referring all risk, the small risk, you shouldn't be referring those. You have to focus on significant risk only. Then we discussed that for every risk, you will be marked twice. One is technical knowledge and other is professional knowledge. Okay. For technical marks, we discussed the writing approach, identify, impact, and scale of the risk. And for professional skills, we discussed that you have to demonstrate 4 skills in your answer: communication, analysis and evaluation, judgment and skepticism, and commercial acumen. When we'll be doing a past paper today, I will teach you in more detail that how you have to demonstrate these professional skills. And then we drafted some example business risk in our last class. Once done with this all, we move towards a technical article relating to business risk topic, in which all the discussion was already covered when we were having the discussion before the article. But we discuss the article still so that you can have more clarity that what are the expectations of the examiner. Because this article is drafted by the examiner himself, it is drafted by the examining team, so it gives a good insight that what are the expectations of the examiner from the student in relation to this topic. We discussed that business risk topic is regularly examined, it is part of risk assessment, and the issues relating to risk assessment are covered in AISA 315. I told you that learning the references of AISA are not required at advanced audit and assurance level exam. You are just required to understand the concepts. Then the article briefed the concepts of business risk and explained that while doing the exam question, you have to use the information given in the exhibits. No background information is required. You just have to use the information given in the exhibits, which means the attachments of the question. You have to evaluate the risk. You have to follow the approach, identify, impact, and scale of the risk. You have to look at the significant risk, okay, those risks for which the question is sufficient detail. And then we looked at one example question in which the examiner himself showed his drafting approach, okay? And we discussed it. We discussed multiple options which the examiner drafted. And I hope you all remember that it was not difficult. It was just about following the approach, identify, impact, and scale of the risk. Then once done with this, we had discussion on professional skill marks associated with business risk. That normally business risk will include professional skill of commercial acumen, because it is something which is related to practical world, to the commercial sense. But in business risk, obviously, you will also be tested for your judgment skill, for selecting significant risk, your skill of communication, of giving headings and using proper wordings. And then he briefed that what you shouldn't be doing. You shouldn't be repeating the facts given in the question. You shouldn't be referring the risks which are already marked as mitigated. And you shouldn't be looking at extreme outcomes in your paper. Okay? And then the article was summarized. In our today's class, we'll start with the first past paper question. We'll be doing this past paper question on the ACCA's CB practice platform, the actual exam platform which you'll be having in your exam paper. See, from the very start, we are following the past papers, we are following the CB practice platform so that you have the practice from the very beginning. Okay, so that nothing comes to you at the end when you're just going for the exam. You will have the idea of the practice platform while we do the questions in class and while you'll be attempting the homework questions. We have developed a similar practice platform on our learning management system, which is same as this. And on that, you'll be given the homework questions. Okay. But before moving towards those homework, we'll first practice 5 questions on business risk in our class. Then I'll give you 3 questions as homework. Okay. So I want you all to listen to me carefully with patience and concentration. Each and everything will be covered. Okay. Because my teaching approach is very much detailed and I teach from scratch. Okay, so let's start this question. It's Winberry Company. We'll first read the introduction of the question, then we'll read all the exhibits, then we'll look at the requirement. We will then discuss the issues which we have to include in our answer. And then we will draft complete answer in our today's class. We'll write the complete answer during our today's class so that you can have complete idea that how you have to deal with an exam paper and how you have to draft a business risk. Obviously, we'll be following our approach, a 3-step approach for business risk: identify, impact, and scale of the risk. Okay, let's start. It is 1st July 2005. You are a manager in the audit department of Quince and Company, a firm of chartered certified accountants, and you are responsible for the audit of Winberry Company, a listed entity and an existing client of your firm. The company has a financial year ending 30th September 2005, and you are about to start planning this year's audit. See, this is an introduction of the question. So normally it do not includes any useful information. So it is just about reading it. The following exhibits available on the left-hand side of the screen provide information relevant to the question. So he's just giving the titles of each of the exhibit. The details of the exhibit will be read here. Exhibit 1 is partner's email, an email which you have received from Olivia Figg, the audit engagement partner. Exhibit 2 is meeting notes, notes of a meeting which Olivia Figg recently attended with the audit committee of Winberry Company, focusing on understanding the current operations and future strategy of the business. Okay, so you'll be provided with detail about the business of the Winberry Company. Then Exhibit 3 is financial information, selected financial information from Winberry Company's management accounts. And Exhibit 4 is internet search, the headline results from an internet search performed by the audit team about the business and the industry. This information should be used to answer the question requirements within your chosen response options. So there are 2 response options. One is a word processor document, which is used for typing, and other is the spreadsheet if you intend to do any calculation. Okay, so this is the word processor document in which we'll do the typing material, and spreadsheet if we intend to do any calculation. Okay, now while we'll be answering this question, you'll get clarity that how you have to use these response options. Okay, so but now we are just closing it. When we'll be start drafting the answer, we'll be using these response options and you'll get more clarity at that time. Okay, so let's look at this past paper question and we are starting with the partner's email. To audit manager from Olivia Figg, audit engagement partner. Subject Winberry Company audit planning. Date is 1st July 2005. See, this information will be used to develop the format of briefing notes. In question number 1, you have to develop a format of briefing notes because you are given with the marks of communication skill also. Okay, let's look at it. Hello. I attended a planning meeting last week with the finance director and a representative of the audit committee of Winberry Company, at which we discussed business developments during the year and plans for the future. I have provided you with my notes from this meeting, as well as some background information about the company from the permanent audit file. Based on the analysis I have done on this industry, it is appropriate for overall materiality to be based on profit before tax, as this is a key focus for investors and providers of finance. Using the information provided in all the exhibits, I require you to prepare briefing notes for my use in which you Now, this is the part A which we'll be attempting. Evaluate significant business risk facing the company. 10 marks. Okay, so we'll be attempting this requirement. Then part B is evaluate and prioritize the significant risk of material misstatement to be considered in planning the audit for the financial year ending 30th September 2005. Currently, we are not attempting risk of material misstatement, but once we'll be studying this topic, we'll attempt these requirements also. You should refer to all exhibits when carrying out the requested risk evaluation. Part C, design the principal audit procedures to be performed in respect of the classification of investment in luxury pad supplies company. Again, currently we haven't discussed the audit procedures topic, but when we'll be covering that topic, we'll refer this requirement also. And with reference to the data protection issue I referred in Exhibit 2, discuss Quince and Company responsibilities in relation to Winberry Company's compliance with laws and regulation. So this 7 marks requirement is in relation to responsibilities of Winberry Company in relation to laws and regulation. Again, this is not the focus area currently. So we will be focusing on business risk now. Now you must be thinking that why I read all of the requirements. Because we have to prepare the briefing notes. For briefing notes, you have to follow a certain format. And for that, you have to refer all of the requirements. Okay. See, if you look at the requirements tab, the requirement is very simple: response to the instructions in the email from the audit engagement partner. The split of marks allocation is shown in Exhibit 1. 10 plus 16, 26 plus 7 plus 7. So 40 marks allocation is given. And 10 marks are for professional skills. Professional marks will be awarded for the demonstration of skill in communication, analysis and evaluation, professional skepticism and judgment, and commercial acumen in your answer. So these 10 marks are on your overall answer. Now, since there are skills relating to communication, so we'll develop a format of briefing notes. Okay, I require you to prepare briefing notes. So in briefing notes, you follow a certain format like to, from, subject, date, introduction. Okay, and then we move towards the requirements. Okay. So from the available information, we haven't found any business risk yet, but let's make the format of briefing notes so that we can at least start gaining the professional skill marks. Okay. The name of the question is Winberry Company. Okay. And we are making format of briefing notes. I want you all to listen to me carefully while I start doing the question. See, when you talk about the format of the briefing notes, that how you have to develop it, it is very simple. You just go here and you copy this information. To, from, subject and date, you just copy it through Control C and you paste it here, Control V. Okay, I'll just adjust the line. Okay, just listen to me how I do it. Now, since we are replying, we are responding back. So what we'll do is that we'll switch the to and from tab. I will cut this from information and I will paste it here in to. Okay, and here I will cut this and I will paste it here. See what I have done. I just copied and pasted this information here. And since we are responding, so now it will be to Olivia Fig and from audit manager. Okay, so we just reversed it. Since we are responding, so it's to Olivia Fig, audit engagement partner, from audit manager. In subject, we will add RE for reply. Okay, and then we have to write an introduction of the briefing notes. See, I'll repeat it again. Listen to me carefully. To Olivia Fick, audit engagement partner from audit manager. Sir, how did we know this? We went to the partner's email. We picked the information from here. We pasted it on the briefing notes. We just switched the to and from tab because now we are replying. In the subject, we added RE for reply. Date 1st July 2005 remains the same. Okay, you have to follow the date given in the question, not your actual date. Now you have to write an introduction of the question. Now, how do you write the introduction? It's very simple. You have to give reference to the name of the company, to the year end, and all of the requirements. Reference of the name of the company, reference of the year end, and all of the requirements. Let's look at it. These briefing notes are in relation to audit planning of Windberry Company for the year ended. What is the year end? Just go and look at the partner's email. Okay, it's year ending 30th September 2005. Obviously, year end is same in all of the requirements. Or it can also be seen in the introduction screen. If you close all the exhibits in the introduction also, you'll find the year end. For the year end date, 30th September 20X5. Okay, now refer each of the requirement. It includes evaluation of what was the first requirement? Significant business risk facing the company. It includes evaluation of significant business risk faced by Winberry company. Now just refer each of the requirement briefly. Okay. Further, it also includes evaluation of. Now the second requirement was, if you look at it, prioritize and evaluate and prioritize the significant risk of material misstatement to be considered in planning the audit for the financial year ending 30th September 2005. Okay, so just refer this requirement also. Further, it also includes evaluation and prioritization of significant risks of material misstatement to be considered in audit planning. Okay, then look at the third requirement. Just refer each of the requirement briefly. Principal audit procedures to be performed in respect of the classification of the investment in luxury pad supply company. You can also copy the data from the requirement. I'll just copy it and I'll just refer it. It also includes, and I'll just paste it, principal audit procedures to be performed in respect of the classification of investment in luxury pad supply company, LPS company. And lastly, it includes evaluation of, now what is the last thing which is included? With reference to the data protection issue referred in the exhibit to discuss Quince and Company responsibilities in relation to Winberry Company's compliance with laws and regulation. So I'll just copy it from here. Further, it also includes evaluation of Quince and Company responsibilities in relation to Winberry Company's compliance with laws and regulations of data protection. Okay, because it was an issue relating to data protection if you read the entire requirement. Okay, so this is your introduction. And then you press enter, you write part A, business risks, and then you will start doing your question. Okay, so if I just repeat it, see, just look at the approach that how I deal with the question. One important thing that while writing introduction, don't take too much stress. Develop it in a normal manner. You just have to refer the year end, the company name, and all of the requirements briefly. Okay, when you make this format of briefing notes, you get marks of professional skill of communication. Okay, and it is a routine drafting. Every time in advanced audit and assurance exam, in question number 1, you will be required to develop this format of briefing notes. Okay, this is fixed. Okay, you have to write to, from, subject, and date. And even you are not writing it, you just pick it from the question. You switch the to and from tabs, okay? Because you are replying. In the subject, you add RE for reply. You give the reference of the date, which is given in the question here, okay? Everything you just picked it from here. And then you develop the introduction. You can change the wordings, that is completely acceptable. Just keep care of some things like refer the year end, refer the company name, and refer all of the requirements. But please keep it brief. These briefing notes are in relation to audit planning of Windberry Company for the year ended 30th September 2005. Name of the company and the year end. It's done. Now refer each of the requirements. It includes evaluation of significant business risk faced by Winberry Company. Further, it also includes evaluation and prioritization of significant risks of material misstatement to be considered in audit planning. It also includes principal audit procedures to be performed in respect of the classification of investment in luxury pad supply company. We just picked this data from the partner's email. Lastly, it includes evaluation of Quince and Company responsibility in relation to Winberry Company's compliance with laws and regulation of data protection. Now, let's start this requirement of business risk, which is a 10 marks requirement. Every business risk worth 2 marks. So you have to write 5 risks in total. Okay. So now let's go in detail of the question further and we'll start finding the risk. I hope that you people are understanding it. If you have any query at any time, you can always ask me on my WhatsApp. Okay. But I make sure that we repeat everything in sufficient detail so that nothing is left which is confusing you. Okay. So let's read this exhibit 2, which is meeting notes. It will give you more detail about the company's business. Winberry Company is a listed company operating as a retailer in the online grocery market with coverage of 75% of the country. The company has a loyal and a growing customer base who place order via either the company's website or application, which can be installed on a customer's mobile phone. See, don't rush in finding the business first. It's a long question. You just have to read it with patience and you'll automatically come through the rest. Okay. Winberry Company fulfills grocery orders delivering to customer homes via a fleet of company-owned refrigerated delivery vehicles. Winberry Company prides itself on having a market-leading inventory system, which ensures that customers can only order groceries which are currently available. This helps Winberry customers avoiding the inconvenience of ordering the unavailable items. So in this paragraph, a brief introduction about the Winberry Company's business was provided, that they are online grocery store, they have a loyal and a growing customer base, they are only online, they have a website and an application, they have some leading inventory system. Okay, so this all is very good. A significant proportion of the groceries supplied by Winberry Company are perishable products. See, when you use this word perishable product, this means that they have short life. They get obsolete or they are not usable after a certain time. Perishable product which have short life. So obviously this is a business risk that they may face the inventory losses, the sale and storage of which is highly regulated through food safety regulation. Winberry Company employs experienced food and product technology professionals to ensure that the company complies with all food safety legislation. So compliance with law is not an issue for them because they have experts for that. But since the product is perishable, so they obviously face a risk that they may face inventory losses. See, obviously inventory losses is a business risk because it will affect your profitability. So first business risk which you can draft here is that they are dealing in perishable products. Okay. But what we'll be doing currently is that we'll be just listing down the business risk. Okay. We'll just list down the business risk and then we'll start drafting. For drafting, we obviously need to have information of the complete question. So we'll just list down the risk as we come through and then we'll draft them at the end. See, for drafting of the risk, I always say that wait for the complete question because you'll find much of the information which can affect the scale of the risk. Okay, you make the format of the briefing note, you get ready for the answer, and then you start listing the requirements. Okay, okay, this is the first risk which I'll be drafting. But the actual drafting will be done when we have read the complete question. The directors of Winberry Company are pursuing ambitious plan in order to establish a strong position in the home delivery grocery market and to explore business partnerships in associated markets. International expansion. Winberry Company is planning to expand into a foreign country of far land by setting up operations similar to its existing business. Farland uses the same currency as Winberry Company's existing operations. The investment is expected to cost $125 million. Winberry Company does not currently have the funds for expansion itself, but is in advanced negotiation with its current bankers who are keen to provide loan finance on the same basis and covenants as the existing loan finance. The expansion is expected to occur in 2006. So obviously this international expansion faces a risk that we are going to another country and we'll be doing this food distribution market. We'll be setting up an online grocery market. But obviously you need to have a very good distribution network there. And since when you are going up in some other country, you will not have the good distribution network in beginning. So you may face troubles in the expansion at the start. And since the expansion is being funded by a bank loan, so there will be a lot of pressure on the directors to achieve good results. Because when bank is giving the loan, they will obviously be imposing a heavy interest cost. and they will also be expecting certain targets of performance. Otherwise, they will simply call back the loan. So the international expansion which they are planning to go faces a risk that maybe the international expansion is not very much successful, and as a result, we will face pressure from the bank. And it is an investment of $125 million. So we are planning to expand into a foreign country by setting up the operations. Now, if you just think about your current operations is a very good distribution network. You have to make sure that your products reach to the customer on time because your products are perishable. So setting up that good distribution network will take time. And obviously, during that time, there will be losses and problems in this international expansion. And since the expansion is being funded through a bank loan, the risk will be a bit higher. Okay, let's move forward. Data protection issue. If you remember, we read this also in the examiner article. This same part was referred there. 2 months ago, Winberry company suffered a cyber security attack in which the personal information of 2,500 customers, including their credit card details, were stolen. According to a representative of the audit committee, the company's internal audit team had not properly assessed the risk relating to cybersecurity, which is a requirement of data protection legislation in the jurisdiction in which Winberry company operates. The issue which led to cybersecurity attack has now been resolved. This means that this incident will not happen again. But what has happened is a very risky thing. Winberry company did not make any report of the breach to the regulators. Now, in this paragraph, there are two primary risks. Number one, loss of reputation. Because those customers whose credit card details have got stolen, they will never be willing to do business with Winberry company again. And since our business is wholly dependent on online sector, so that loss of trust will be very critical for us. And most importantly, we are hiding the information from the customers. We are not making reports to the breach, to the regulator or anyone else. We are hiding it. So obviously, when this thing will come out automatically, obviously, when the credit card details have got stolen, the customer cards will be charged and someone will be doing a fraud. There will be some investigation and our name will come out sooner or later. And that will damage the customer's trust a lot. So loss of reputation is one of the risks which you can refer, or you can also refer a risk relating to the penalty, the fines which you'll be facing from the regulator, because obviously you are hiding it from the regulator, and whenever they will find about it, they will impose heavy fines. Now you can refer any one risk from it. Okay, don't write both of them because for every issue, there are specific marks which are allocated in the marking scheme. So for data protection issue, either write the reputation one or write the regulatory risk of fines. Okay, don't write both of them, write any one. Okay, we had to write 5 business risks and give fine 3 of them in this exhibit. So I believe that till now the question is not difficult. We are just reading it and we are listing down the risk. We'll look at further detail when we'll be drafting them. So first risk was perishable products, short inventory life. Then international expansion, obviously lack of experience and lack of distribution network. And the issue of data protection. Okay, let's move forward and look at third exhibit, which is financial information. Okay, let's look at it. I want you all to listen to me carefully while we read this question. Now there is revenue from groceries. Last year revenue was 358. Now it's 587. Packed goods from LPS company. Last year it was 0. Now it has increased to 10. Total revenue 358 to 597. Operating profit has increased from 110 to 172. Profit before tax has increased from 31 to 53. So the performance is going good. It's an increasing trend. Total assets 884 to 957. Currently, we are looking at business risk, the issues of the business, not the accounting risk of misstatement. Okay. So let's continue reading it. Included in total assets, net assets as consolidated relating to the subsidiary LPS company, $60 million. Property, plant, and equipment relating to fire damaged warehouse, 67. Long-term borrowing has increased a lot from 5 to 33. Number of premium delivery pass customers, 146,250. So we have just read it. Let's look at the notes, which will give further explanation. Okay, listen to me. Now, revenue 358 to 587, note number 1. Let's look at it. Groceries revenue revenue earned for a new initiative launched during the year by Winberry Company. This guarantees a weekly delivery slot for customers who sign up for a premium delivery pass. The premium delivery pass is an annual membership with a fees of $60. The fees is invoiced in advance and the revenue is recognized in full at the time of invoicing. Now, see, this is an accounting risk that they are recognizing revenue wrongly. That since it is an annual membership pass, they invoice it in advance. Okay, that is their business thing. But their revenue is recognized in full at the time of invoicing, which means you book revenue at the start of the year, which is obviously not an acceptable treatment. Just think about it. You bill to the customer at the start of the year, you bill to him in advance, and you recognize the entire revenue. Now, as per IFRS 15 revenue, if you remember, you have to book the revenue as you provide the service. You cannot book the revenue in advance. So they are recognizing the revenue in advance at the start of the year. That is an accounting issue, not a business risk. Currently, our focus is business risk. Okay, from the business perspective, it is good that revenue is growing and they have started a new initiative. But from the accounting perspective, recognizing this revenue in full at time of invoicing, which is advance, that is not correct. Exhibit note number 2, Windberry Company has entered into a joint venture agreement with Dorian Company and is investing $30 million in a newly formed company, Luxury Path Supplies Company, representing 50% of the share capital of the company. The remaining 50% shareholding is owned by Dorian Company, a leading national chain of VATs and pad goods supply. So there's a joint venture situation. $30 million is invested by Winberry Company owning 50% of the share and Dorian Company is invested 50%. So obviously it's a joint venture, equal shareholding. The contract behind the investment states that Winberry Company and Dorian Company will work together to develop the supply of a range of pet supplies, food toys, and accessories. The joint venture agreement utilizes the established online presence of Winberry Company and their distribution network, and Dorian Company's existing knowledge of the pet goods supply market. So we have entered in a new market of pet goods supplies. Dorian Company is expert of it, and we have expertise in online and distribution network. Both parties will have equal voting rights and equal rights to the net assets of LPS Company, with profits to be shared equally. The investment is expected to take place in August 2005. The finance director of Winberry Company plans to consolidate the results of LPS Company as a subsidiary. See, this is an accounting issue. How can you do consolidation of joint venture? For joint venture, we follow equity accounting, which is similar to associate accounting. How can you consolidate it as a subsidiary? The share of the results attributable to Dorian Company is shown as non-controlling interest. Obviously, the accounting treatment is being done wrong. 100% of the LPS company revenue from incorporation is shown separately in the financial information above, owing to Winberry Company's full compliance with IFRS 8 operating segment. These all issues are relating to accounting, the risk of material misstatement. The finance director believes that despite Winberry Company and Dorian Company each owning 50% of LPS Company and having equal representation on the board, Winberry Company's contribution of knowledge to the joint venture is greater, and therefore Winberry Company should consolidate the investment. See, when you talk about accounting, it is not about your knowledge. It is about your ability to control. And that ability to control do not belongs to Winberry. It is equal. Winberry 50, Dorian 50. So as per accounting, you cannot consolidate it. But that is an issue of risk on material misstatement. If I talk about business risk, see, whenever we enter into a joint ventures with someone, there is always a risk of dispute. And I can feel that the dispute will happen because the approach of Winberry Company of controlling it, that we have the greater knowledge, it will ultimately lead to the disputes. And do note that we are not the expert of pet industry. We are just an online distributor. That pet supply, food, toy, and industry belongs with the Dorian Company. So if there is dispute in this joint venture, we are done with it. We have no expertise to manage this business segment. Okay, so joint venture arrangement Whenever we enter into a joint venture with someone, it always have a risk of disputes. And apparently here, there will be disputes due to the approach of Winberry company. When you call something as your subsidiary, you say that it is my control. And it is not your control, it's a joint control situation. So there will be disputes. And obviously, since we don't have the expertise of that industry, if there will be disputes, our investment will be in severe problems. Now, let's look at note number 3. In January 2005, there was a fire in one of the company's 5 warehouses, which completely destroyed the premises. But fortunately, no staff were injured. The warehouse serviced the northern region of Winberry Company's customer base. The finance director has not written down the carrying amount of the warehouse in property, plant, and equipment, as he's confident that the company's insurance policy will cover all of the cost. See, from the accounting perspective, this is wrong. When your warehouse has got damaged, you have to impair it. Insurance is something different. Okay, this is the accounting issue. But if I talk about business risk, we have suffered a loss of asset. And loss of asset is obviously a business risk. The insurance company has confirmed that they will repay Winberry company for the inventory lost. However, the claim for warehouse building and machinery is still ongoing. Winberry company was able to utilize their remaining 4 warehouses to provide coverage to the northern region customers. Now, obviously, this damage of warehouse means a loss to asset. And if insurance company do not pay, it's a complete loss of our company. And most importantly, our operations are being suffered because we have only this warehouse. The warehouse suffered the northern region customers. So obviously the northern region customers must be suffering now. And since our product is perishable, listen to me carefully. Since our product is perishable, so one of the warehouse being damaged and servicing from other warehouses will cause delays in the delivery. Since our product is warehouse is perishable, so there will be a risk that we'll face more inventory losses. Okay, so damage to warehouse, this is a very significant issue which we will be facing. Okay, now number 4, long-term borrowing comprises a bank loan taken out by Winberry Company to fund the joint venture of LPS Company with Dorian Company and the purchase of electric delivery vehicle. The bank issued the loan on the same terms as their existing loan, which has a covenant that interest cover is maintained at 3. So this note relates to the long-term borrowing, which have increased this year from 5 to 33. Okay, so the long-term borrowings have increased because during the year they have taken additional loan for the joint venture for LPS company and they have purchased some electric vehicles. And if you remember, they plan to take more loans for the international expansion also. And for the loans, they have to maintain the interest cover at 3. So we discussed earlier also that when they will go for the international expansion, obviously in the starting years, it will face difficulties. And as a result, it may not be able to generate the profits and this interest cover may decline and the covenant may get breached. Okay, so you can draft a point on additional loans and the long-term borrowings which the company is taking, that their loans have already increased from 5 to 33 due to the loans which they've taken for the joint venture and the purchase of electric delivery vehicle and further loans which they plan to take for their international expansion. Okay, so increasing loans. This is also a business risk, obviously, because it creates pressure on the directors to show better results. Okay, now, exhibit number 4, let's look at it. Internet search, that what he's talking in that exhibit. Okay, search results for Winberry Company. 3rd November 2004. Just a second. Keeping up with the demand, Winberry Company ahead in home delivery grocery revolution. The Grocery Trade Journal, Perishable Planet, reports that demand for online grocery delivery has reached an all-time high and shows no sign of slowing down. Traditional supermarkets cannot keep up with the demand, leaving opportunities for gains in market share for online operators. So this is a good thing for Winberry Company business, that online grocery market is growing and Winberry Company is ahead in this revolution. Then another search result, 15 January 2005, local residents to bring a legal action against Winberry Company. A group of 30 local residents who claimed their health was suffered by toxic fumes from the huge fire at Winberry Company's northern warehouse are bringing an action to claim for compensation. The local residents' legal representative confirmed that they have served a claim against Winberry Company as they believe there was health and safety breaches due to failing in the sprinkler system in bringing the fire under control quickly. Winberry Company's Health and Safety Department has launched an investigation which concluded that warehouse staff had manually overridden the automatic sprinkler system to prevent water damage to the goods. So obviously there was a failure in health and safety requirements at the end of Winberry Company. So the claim brought by these local residents will most probably be successful and Winberry Company will have to pay compensation in relation to it. Further, it will also cause harm to our reputation because obviously the individuals who are affected by this incident will have bad image of Winberry Company and they will not be willing to do business with Winberry Company in future. Okay, so claim of local residents, this is also one of the business risks which is being faced by Winberry Company because this claim will most probably be successful and Windberry Company will have to settle them because the internal investigation has concluded that our staff had overridden the automatic sprinkler, which has resulted in bringing the fire under control. And as a result, these toxic fumes have harmed the local residents. And then 18th February 2005, eco-friendly vans caused delivery disruptions for Windberry Company. A new fleet of 80 electric vehicles costing $50,000 each has caused a delivery chaos to Winberry Company's loyal customers. The vehicles can only travel for 100 miles without requiring recharging, which has left customers experiencing delay up to 4 hours for their groceries. The eco-friendly vans were initially selected for purchase by management based on a suitable delivery range. However, at the request of Winberry Company, the manufacturer of the vans added refrigeration units to each vehicle, which has significantly reduced the distance the van can travel on a single battery charge. So obviously these eco-friendly vans are causing the delay because they can only travel 100 miles on a single charge. So obviously they have to go for recharging and as a result deliveries are getting delayed. And do remember our inventory is perishable. So we cannot bear up with this delay in delivery. So obviously this is causing problems to our delivery system and ultimately we'll have to withdraw these 80 electric vehicles which costed us $50,000 each. Okay, so obviously this is a loss to our business, the eco-friendly vans which we purchased. Okay, so if we look at it, we are done with all of the exhibits and then there is a tab of requirement which we have already discussed earlier when we started drafting of the briefing notes, that we have to respond to the instructions of the email of the audit partner, the mark allocation we know from the partner's email, and currently we are dealing with requirement A, which is a 10 marks requirement. And then professional skill marks, which are demonstrated for communication, analysis and evaluation, skepticism and judgment, and commercial acumen. Now, if you look at the points which we listed down, part A, business risk, it's a 10 marks requirement. So we have to draft 5 business risks. But how many we have listed down? 1, 2, 3, 4, 5, 6, 7, and 8. You have to draft any 5 from these. You have to make sure that you write any 5 of the business risks. Any 5 which you feel as easy ones. Because these all are the significant risks. We picked all of those risks for which sufficient detail was given in the question. Perishable products, short inventory life, okay, international expansion, lack of distribution network, and lack of experience in the expansion which we are doing in farmland. Data protection issue, 2,500 customers' credit card details have got stolen, so loss of reputation and risk of penalty also. Joint venture arrangement, a significant investment in a joint venture situation, which obviously faces a risk of disputes which may happen. Damage to warehouse. The warehouse has been destroyed of northern region and insurance company is not willing to provide a cover for it because they've approved the claim for inventory, but for the warehouse building and equipment, it is under discussion. Increasing loans. The loans have already increased from 5 to 33 for the investment in the joint venture and for electric delivery vehicles. And we are further attempting to increase the loan for our international expansion. Claims of the local resident who have been damaged due to the fire, they are filing a claim against Winberry Company and eco-friendly vans who are not proving to be very good because the deliveries are getting delayed. So you have to write any 5 business risks from these. Okay, so we'll write the first 5 ones and we'll try to cover the issues which we are not writing in these 5. Like, for example, when we'll be writing a point of perishable product, we'll try and refer the issue of eco-friendly vans within it. That due to the issue of eco-friendly vans, the delays in the delivery, the perishable product issue will increase more. Okay, now let's start drafting the business risk. I want you all to listen to me very carefully while we draft it down. I hope you all remember the approach. Identify, impact, and scale of the risk. A 3-step approach. For every business risk, you will get 2 marks. Okay. Now, if you remember, we read in exhibit number 2 in the meeting notes that a significant proportion of the groceries supplied by Winberry Company are perishable products. So when we are dealing in perishable products, there is obviously a business risk of inventory losses because the inventory has short life and it may go expired if it is not delivered to the customers on time. Okay, so let's first identify the risk. Make sure that you don't repeat too much. Just pick up the risk. Okay, Winberry Company, Winberry company's business faces a risk of inventory losses as major portion of its inventory includes perishable items which have short shelf life. Okay, that they have a very short shelf life. It goes expired in a very short time. So first you identify this. So what is the risk? That it faces a risk of inventory losses as major portion of its inventory includes perishable items which have short shelf life. Now let's think about the impact. What is the impact? If the inventory will go expired, you will suffer inventory losses, and obviously those inventory losses will result in declining profits. And if by mistake you deliver some expired item to a customer, it will also lead to impact on your reputation. Okay, so let's think about the impact, that what will happen if this risk materializes. Okay, if Winberry Company's inventory gets expired, then it will result in loss of profits as expired inventory will be written off from books, from its accounts. Okay. Further, obviously you are talking about the profit, so you have to refer the word accounts a bit. Further, if any expired item is delivered to customer by mistake, then it will result in reputation loss also. Then it will result in reputation loss and regulatory issues also. Okay, so this is the impact. Just look at it, that how I draft the risk. Winberry Company's business faces a risk of inventory losses as a major portion of its inventory include perishable items which have short shelf life, that it gets expired soon. You can also write that which have short expiry. You can change the wordings. Obviously, that is acceptable. But you have to demonstrate your 3 steps. Then impact. If Winberry Company inventory expired, then it will result in loss of profits as expired inventory will be written off from its accounts. Further, if any expired item is delivered to customer by mistake, then it will result in reputation loss and regulatory issue also. Now, let's talk on the scale of the risk, like why this risk is becoming significant. So think about the warehouse damage and the eco-friendly van. Both of these issues will cause delays in the delivery. One of the warehouse of northern region is damaged, so that will also cause delays in delivery. And second issue was of eco-friendly vans, which are also causing delays in delivery. So automatically the perishable product issue will increase more. Okay. Due to destruction of warehouse in northern region of Winberry Company customer base, the risk of delayed deliveries will increase which may result in perishable products getting expired. Okay, further, eco-friendly vans, purchased by Winberry Company are also causing delays, in deliveries to customers, which also increase chances of perishable products getting expired. Okay, so this increases the scale of the risk that this may happen. It increases the chances more. So just look at the approach that how I am drafting. When you'll understand the approach, every risk will become easy. First, you identify the risk. Winberry Company's business faces a risk of inventory losses as major portion of its inventory includes perishable items which have short shelf life. Identify. Impact. If Winberry Company's inventory get expired, then it will result in loss of profits as expired inventory will be written off from its accounts. Further, if any expired item is delivered to customer by mistake, then it will result in reputation loss and regulatory issues also. Scale of the risk. Due to destruction of warehouse in northern region of Winberry Company's customer base, the risk of delayed deliveries will increase, which may result in perishable products getting expired. Further, eco-friendly vans purchased by Winberry Company are also causing delays in deliveries to customers, which also increase chances of perishable products getting expired during the delivery process. So this entire risk is getting increased. So identify, impact, scale of the risk. Okay, just listen to me carefully. This is the first question which we are doing. We'll do 5 questions. So with time, everything will get easy. So it is very important that you listen to me with patience and concentration. Let's move towards another risk, international expansion. Now, let's identify the risk. If you remember, we were going for an international expansion in Farling by setting up similar operations to its existing business. It is an investment of $125 million, and this expansion will be funded through a bank loan. Okay, and it will be on the same basis and covenants as the existing loan finance is. So what is the risk in this international expansion? The international expansion of Winberry Company may not be successful because it may not be able to set up a similar distribution network in farmland like it currently have in its own country. Okay, so let's first identify the risk. International expansion of Winberry Company may not be successful in initial years as it may not be able to establish a good distribution network in farmland like it has one in its own home country. Okay, so this is the risk that international expansion of Winberry Company may not be successful in its initial years. Because in the starting years, obviously, it will take time to establish the distribution network. And obviously, the entire business of Winberry Company is based on distribution. You have to make sure that your inventory reaches to the customer on time. Now, what will happen? Think about the impact. Like if this expansion is not successful, what will happen? Your reputation will be affected in that international country, and that loss of reputation may also affect your business in your home country because it's time of social media. People will get to know about the delays and the problems which Winberry Company is facing. Further, it is a significant investment of $125 million, and that is also financed by loan. So obviously, it will put pressure on the directors to report good results. Okay, so what will be the impact? Due to operational difficulties, which Winberry Company may face in farmland, its reputation may get affected in its new market of farmland and also of its home country if negative reviews are given to it online, because when you talk about online, it is global. Okay. And obviously, it will also divert the focus of the directors. That they will get too much focus in there in the operational difficulty, and the local market will start to suffer. Further, it will also affect focus of directors in local market, which is currently growing, as they may get occupied in operational difficulties of farmland. Okay, so this will be the impact that this will happen. Now let's think about the scale of the risk. The scale of the risk is very high because these are not your funds which you are investing. You are taking them from the bank loan. And obviously, the bank will require good results, they require good interest payments, and they require you to maintain the interest cover at 3 because this loan is on the same covenant. And in the initial year, the results will not be as good. So there will be fixed interest cost. The profits will not be rising. So the interest cover may decline. Okay. This risk is significant for Winberry Company as this expansion for Winberry Company as this expansion will be funded through bank loan. Okay, bank will expect good results and will require fixed interest payment. Okay, in initial years when this investment will not perform well, fixed interest cost will result in concerns on covenant of interest cover to be maintained at least 3 times. Okay, so your interest cover will also face pressure and it will also be in concern. So if you look at the drafting, see, I write the answer with you people. I always say to my students that it is very easy for me that I just open the examiner answer like other teachers and I read it for you. Or I just discuss the points and I say that, okay, write it on your own. But that will never give you an idea that how you have to draft. I write it with you people. We draft it in the class so that you can have an idea that, okay, this is identification, this is impact, and this is the comment on scale of the risk. So obviously drafting in class takes more time, but it gives a very good clarity to the students that how they have to deal with the actual exam paper. Okay, so international expansion of Winberry company may not be successful. The identification in initial years as it may not be able to establish a good distribution network in Farland, like it has one in its own home country. Now the impact. Due to operational difficulties which Winberry company may face in Farland, its reputation may get affected in new market of Farland and also of its home country if negative reviews are given to it online. Because obviously when you talk about online reviews, it's global. Everyone can read everything. Further, it will also affect focus of directors in its local market, which is growing as they may get occupied in operational difficulties of farmland. And it was written in exhibit number 4. See, this is your skill of evaluation that you're referring all the information. Okay. In the exhibit 4, it was written that our local market is growing. So getting diverted towards other market is not good. And then comment on the scale. This risk is significant for Winberry company as this expansion will be funded through bank loan. Bank will expect good results and will require fixed interest payment. In initial year, when this investment will not perform well, fixed interest cost will result in concerns on covenant of interest cover to be maintained at least 3 times. Okay, so if you just look at it, how I graph the risk, I believe that this is not difficult. You just need to follow the approach. Identify, impact, and comment on the scale. Okay, now let's draft a point on data protection issue. If you remember, the credit card details of 2,500 customers were stolen and the company has not reported it to the regulator. So obviously the company is hiding this information. So let's draft a risk on data protection issue. Winberry company may face a risk, to its reputation if information about data breach gets into public knowledge. Okay, so this is a risk to its reputation. There will be a reputational loss. First, you identify the risk. Now, let's think about the impact that what will happen. What will happen if this thing comes into public knowledge? Obviously, the customers will not be willing to deal with Winberry company in future. Their trust will get affected. Okay, customers will not be willing. Customers will not be willing to transact on Winberry company website. On Windberry company website, if this comes into public knowledge that credit card details of 2,500 customers got stolen from Winberry company database. Okay, from Winberry company's database. Okay. One thing I want to make it clear, small spelling errors are ignored in the exam. Okay, so don't worry about it. Like small spelling errors, which are typing errors, they are ignorable. Okay, so customers will not be willing to transact on Winberry company website if this comes into public knowledge that credit card details of 2,500 customers got stolen from Winberry company's database. This will result in decline in its sales. Okay, obviously the customers will not be willing to deal with the Winberry company in future. Because even if I talk about myself, if I get to know that my credit card detail got stolen, I'll get very serious. And not only on that website, I'll not be willing to do any online transaction. Because obviously it will be the loss of funds of the customers. Now let's comment on the scale of the risk. This risk is significant because Winberry company is only online business. Okay, it is only online. It has no physical stores. And further, Winberry company is hiding this situation. So whenever this thing will come into public knowledge, it will affect the trust a lot. Okay, this risk is higher for Winberry company as Winberry company is only transacting or is only trading online and has no physical stores. Okay, loss of trust on online sales will affect Winberry company more, considering its sole dependency on online sales. Further, as Winberry company is hiding this incident, therefore risk to reputation is greater, because whenever this thing will come into knowledge, this incident will come in public knowledge, it will affect customer trust more, because Winberry company is hiding its failure. Okay, because hiding things will affect you more, because obviously the customer will get more, his trust will get more affected that, okay, this company hides the thing, and when they compromised our credit card details, they should at least have informed us. So you would have stopped our credit cards. Rather than informing us, they increased our loss by not informing us. Okay, here some students can also write a risk relating to the regulatory fines, because it was also a breach of regulation. So if you look at the risk, first we identified Winberry company may face a risk to its reputation if information about data breach gets into public knowledge. Identify, then impact. Customers will not be willing to transact on Winberry company website if this comes into public knowledge that credit card details of 2,500 customers got stolen from Winberry company's database. This will result in decline in its sales. Then scale of the risk, that this risk is higher because our sole dependence is on online, and we are also hiding this situation, which will obviously annoy the customers more because we hided something which was affecting their interest. Are you getting it? Now let's move towards one more risk. See, drafting the risk in actual gives you more clarity with how you have to deal with a real exam. Now let's look at one more risk, joint venture arrangement. Okay, this joint venture arrangement, which we invested $30 million with Dorian company in a joint venture of luxury pad supply company. So obviously every joint venture has a risk of disputes and differences in the management style. And if there are disputes and there are differences in the management style, obviously this investment and this venture will not work in long term. And as a result, this investment will suffer losses. And this risk is very high. This risk is significant. This risk will affect us more. Reason being, listen to me carefully, reason being that we don't have expertise of that supply market. We are solely depending for this on Dorian company. We are just online expert and distribution network expert. Dorian company has the expertise of the market. And secondly, the statement of the finance director that we need to treat it as a subsidiary and take it in our control indicates that our approach is wrong. It will lead to disputes in future because it's a joint venture. It is not a control situation. If both of the parties will try to take the control and will try to impose their decisions, obviously this will lead to problems. Okay, now, joint venture investment in luxury pad supplies company faces a risk of failure of investment due to disputes and differences of management style between Winberry Company and Dorian Company. Okay, and Dorian Company. So this is the identification. It faces a risk of failure of investment, that the investment may not go good because there may be disputes and differences of management style. First, you identify the risk. Think about the impact. What will happen? This $30 million investment will face loss. Okay. If investment in LPS company do not go good, do not went good as planned, then planned investment of $30 million will suffer a loss. Okay, Winberry company do not have knowledge of pad industry, and as a result, it may not be able to manage this investment on its own if there are disputes with Dorian company. Okay, we'll not be able to manage this investment. If there will be any dispute, it's done. We'll not be able to manage it ourselves. So this investment of $30 million will suffer a loss. Now let's comment on the scale of the risk. The chances of dispute are very high because the approach of the finance director that we will control the company because we will contribute greater knowledge. So obviously this indicates that in long term, both parties will try to control the investment, and as a result, there will be disputes. Okay, chances of disputes in this investment are high considering comments of finance director of Winberry company that they will control this investment and treat it as their subsidiary, considering that they are contributing more knowledge. Attempts to control investment in a joint venture situation normally leads to disputes between investors. Okay, because obviously it's a joint venture situation and you need to read the agreement before what you are saying. Because once you will create it as a subsidiary in your accounts, obviously Dorian company will get offended. They will say that what you are doing. If it's your subsidiary, then what is our position? Obviously, you are showing your bad intent. Subsidiary means we will decide everything. Once you show that, there will be disputes in the investment. Okay, so first you identify the risk, that there's a risk of disputes and investment suffering loss. Then you discuss the impact, that what will happen, that if there are disputes, then the investment will suffer losses and will not be able to manage it. And then you commented on scale of the risk, that chances of dispute are very high considering the comments of the finance director. And then the last business risk which will be dropped, because we have to write 5 only, 1, 2, 3, and 4. Let's write the 5th one. damage to warehouse. Now, when you talk about this damage to warehouse, your warehouse has been destroyed due to the fire. Okay. And if you look at the value of this warehouse, it was given the financial data, property, plant, and equipment relating to fire damaged warehouse. In the current year, it represents $67 million. Okay. The values are in $1,000,000. So it represents $67 million, which is obviously a significant value asset. And it has been damaged due to the fire. And apparently, the insurance company is saying that we are talking on the machine and the building. For the inventory, they have said that, okay, we'll pay them out. But for the building and machinery, the discussions are going on. So obviously, this is a loss of $67 million, which is obviously a business risk. And we'll have to spend funds on repairing it or getting a new warehouse arranged. And if the insurance company do not pay this amount, obviously this will be a big concern. And this issue is also a concern for us from operational perspective, because this was the warehouse servicing our northern region customers. So our northern region customers may get dissatisfied and they may switch to alternative vendors. So that is also a concern which we are facing. So damage to warehouse. Warehouse damaged of Winberry company has resulted in loss of $67 million, has resulted in loss of assets worth $67 million, which will affect profits when written off or when written down. So this is the identification that it's a loss of $67 million asset. Okay. Obviously, we have referred the impact also briefly because it was part of identification here. But now let's talk about the impact in detail. If the insurance company do not pay this for this loss, then obviously we have to arrange a new warehouse or we have to repair it. So this 67 million burden on our cash flows will obviously be a big issue. Okay. Now, if insurance company of Windberry company do not pay for this loss, then Windberry company will face a cash flow burden of $67 million in order to arrange a new warehouse or get an existing one repaired. Okay, so it may face a cash flow burden of around $67 million, which was the current value of it, okay, or to get it repaid. So this will be the impact. Your profits will also decline and you will also face a cash flow burden, okay. This risk is higher as insurance company has approved claim for inventory lost, but for warehouse building and machinery, discussion is in place, is ongoing. Okay, they haven't approved it yet. Okay, further, this issue will also create operational difficulties. As it used to deal with northern region customers. Currently, Winberry company is covering it through other warehouses, but this will lead to additional pressure on other 4 warehouses and will also cause delays in deliveries. Okay, so it was stated that they are currently dealing it with other warehouses, but obviously dealing it from other warehouses will also create pressure there. The other regions will get affected because we only have 5 warehouses and from them, one of them has got affected. Okay, and obviously there will be delays in the delivery also. So we have lost an asset of $67 million. Obviously, it's a big loss to our business. So it has caused loss to our profits. We have not currently recorded or written off, but when we'll be talking about the accounting issues in risk of material misstatement, we'll obviously require the management to write it down. And secondly, it will also create a cash flow burden of around $67 million, which is obviously a big amount. Because if you look at it here, property, plant, and equipment relating to fire damage warehouse, it's $67 million. And that has been completely destroyed. This issue is greater because insurance company has approved the claim for inventory, but not for the building and machinery. And this was the only warehouse dealing with our northern region customers. So maybe they switch to other clients, other vendors, other providers, because we are not able to deal with them, or we may be causing the delays in the delivery. Okay. So it was a 10 marks requirement relating to business risk. You had to draw 5 risks. 1, 2, 3, 4, and this was the 5th one. Still, we have 3 risks remaining. Like you can draft a point on increasing loans that already company took additional loans. They increased their loans from $5 million to $33 million. Heavy gearing, interest cover covenant, and then they are planning to take more loans also for their international expansion. So increased loans will create pressures on the director, and ultimately it will lead to breach of covenants if sufficient profits are not generated. Then claim of local residents, that local residents were filing a claim, and as per our internal investigation, it was indicated that it was a failure at our end, which resulted in such a big fire. And eco-friendly vans, which is a loss of investment, considering that they are causing deliveries and delays in the delivery, and it's causing a delivery chaos, and obviously will not be able to continue with these vans in long term because we cannot manage with the delays in delivery. So if someone would have written these 3 business risks also, that would also be acceptable. But in the exam, you have to make sure that you write till the marks available. Okay. Normally, examiner gives 2, 3 risks extra in your question, so that if some student is not able to identify any one of them, he can write and cover his marks to the other risks. I hope that you people have understood our today's discussion. Okay. So we are done with these 5 business risks, which are sufficient to gain our 10 marks. We'll be doing more past paper questions also, so you'll be getting more clarity on the drafting skills. See, when you drafted these business risks, it didn't require any of your rote learning or the conceptual learning which you studied in the class. It didn't require any conceptual learning. You didn't refer any concept of the business risk. Only thing which was relevant in this entire answer was this exam focused discussion. So which I say to my students always, that when you talk about AAA, it is not about learning the topics. It is not about reading the book. It is about practicing the past papers more and understanding this drafting approach. Identify, impact, and comment on the scale. Okay. So if you look at this complete answer, we started with the format of briefing notes. We drafted the format of the briefing notes to, from, subject, date. Okay, we picked up the data from the question. We switched the to and from tabs. In the subject, we had RE for reply. We drafted the introduction, refer the name of the company, refer the year-end, and all the requirements. Okay, and then each business risk approach is very simple. Identify, impact, and scale of the risk. Perishable products, the inventory have short life, so there is a risk of inventory losses. It will affect our profits. Risk is higher because one of the warehouses is destroyed, and the issue of eco-friendly vans is also causing delays. International expansion, we may not be able to develop a good distribution network in starting years, and as a result, our expansion may not be as successful. Data protection issue, the breach of the 2500 customer data, it will affect our reputation, and customers will not be willing to deal with us in future. Joint venture arrangement, chances of dispute, which are very high due to the comments of the finance director, and damage to the warehouse, which is a loss of assets, and obviously it will affect our profits also. Okay, so I hope that you people have understood it. If you have any query, feel free to contact me on my WhatsApp. And just listen that it's the first question of the series of past papers which we are doing. Okay, so we are doing these past paper questions, obviously, which belong to the previous attempts, the previous years. We will be doing all of these past papers. And once done with all of these past papers, then I'll be giving you few questions as homeworks also, on which I'll be giving you my personalized feedback. Okay, thank you, everyone.